What's up, everybody? Welcome to another edition of our video podcast here for the Out Fast podcast. And before we get started today, I want to make sure if you guys have been finding value in our podcast to find us on iTunes, on Stitcher, on Facebook, on YouTube, pretty much anywhere you can think of, we're putting this podcast out for you guys. So if you haven't subscribed yet, please go subscribe. Like us on Facebook, like the video podcast. Comment on it. Have any questions, make sure you comment on it and let us know your thoughts. You can always reach us at info@outfastrealty.com, and we can answer all your questions off the air and via email. So today's podcast, we're going to be talking about mortgages, and something that is, a hot topic because the fact that the market is hot and there's lots of people looking to buy their first home or upgrade to their potential dream home. So today we have Rod Khleif from Guild Mortgage with us today, and we're going to be kind of going over why he does what he does, how he does what he does, and we're going to talk about also a little bit of his investment career because he's also a landlord. So Rob, thanks for coming on the show, man.
Hey, thanks for having me, guys. Yes, second podcast in my life here.
Awesome.
So I appreciate you guys having me. This is going to be fun.
Cool. So, Jeremy, you want to kind of,
Yeah, so why don't you give us a little bit of background, kind of how you got started and how long you've been doing the lending and what kind of piqued your interest and why you've been doing it for, I think, 10 or 12 years now, right?
It's close to 13, yeah.
Oh, yeah.
So
wow.
Definitely been a while. Got into the business before the big crash back in 2007, right out of college. Started doing refinancing and was just calling people from 6 to 8 at night every night, trying to get people to do cash out refis. Well, that's not really the industry nowadays, and it's a heavy purchase industry. So 95% of my business is purchase money lending.
Oh, really?
Yes. Because rates were so low about 2-3 years ago, almost everyone refinanced and they have fixed rates. So not many people have high rates anymore to do those refinances. However, what I've seen is that equity's at an all-time high right now. So people are either upgrading or they want to do an addition, or some people are doing debt consolidation. That's actually back recently. So the equity's at an all-time high. So I have seen a little bit of tick up in refinancing. But going back to my background, I've been in the Tampa Bay market working for banks as a broker, always doing mortgages. Guild Mortgage is a non-bank direct lender. So that's really all I do is just help people buy houses, only doing residential loans.
So take us back to like when the market did turn. How did you kind of weather the storm? What was your strategy there? I mean, a lot of people obviously got pushed out, but that's a great time to, if you have the capital, to grab market share as well. So kind of walk us through what happened in your personal story through that time too.
Yeah, an amazing time. I actually bought at the worst possible time ever to buy a house. So March 15th, 2007. So it was like right before St. Patrick's Day. And I remember buying my first house, South Tampa.
And you partied
South Candy.
Oh yeah,
That was fun. So that was a bachelor pad. That is one. I had roommates, and that turned out to not be the best investment, but I held on. I kept it. I didn't foreclose on that property, and I felt like it set me up to be, properly. I guess my credit was okay enough to where if I had the capital in 11, 12, 13, I could have capitalized on a lot of those great buys. So what I learned over that period of working in the business is, be ready for that kind of little dip or that recession. Now, it's not going to look like it did last time. It's not going to be a super big crash because I feel like the mortgage industry, we're verifying a lot more documents. We are, and it's every lender. It's not just us, but you have to provide tax returns. You can't just state your income, state your assets like you were doing before. So the loans are better performing. And that's what resulted in part of the crash was that there were really ugly loans that really didn't have any structure. So my experience is, be ready for a recession, try to have liquidity. Sometimes it's good to hold on to money when the market's hot, to wait for that dip. So
yeah, does your company help you guys? I'm sure they give you resources and tools. Do they do any kind of forecasting for you, or how do they approach what's maybe coming down the pipeline as the economy kind of trails along, or that sort of thing goes?
It's hard, man. I mean, I'm not an economist, so no. We just like to help people buy houses when they need them, every day. But there's many smarter people than myself and all of us out there that analyze that stuff, and it's very hard to predict. They say every 10 years, but we're past that.
We're way past that already
right?
at this point.
So you don't know, and it's not going to look the same. So I mean, rates are great right now, and there's a lot of people buying houses. So I can't say that it's going to happen soon or it's going to happen in the next couple of years. But
yeah. Do you have what do you think the rates are going to continue to increase in 2019? And what do they stand at today for residential and then if the commercial or that sort of thing?
So all I do is residential, so I can talk on that. But rates where they stand. What happened actually after Thanksgiving was great. They took a huge dip because the Fed kind of pulled back their estimates of how many hikes they were doing. Some things were going on too in the global economy, and that's really helped spur, I think, a lot of the buying in January and February. So about a half a point. They're sitting right around 4.5% for a 30-year fix for like top tier. Some you can get a little bit below that, but right around 4.5, I would say.
Yeah,
still amazing.
As a range. I know
It's still ridiculously low,
right?
So I mean, now's still the time. I mean, the market's still good. The inventory is still low. So now's the time to meet with someone like yourself. I'm assuming to get this the ball rolling.
Yeah, I think it's a great time. So what I've found too is after being through a recession, like there are some pockets of any city, even just here in Tampa, that bounce back within like a year and a half.
Sure.
So I try to look as an investor on like spots that are going to have demand regardless. I mean, there's always people moving to Tampa. There's a military base. We have a college. They're building huge developments with Vinnick. So those are the areas that aren't going to be affected no matter what the recession looks like. So that's my philosophy.
That's a great point because sometimes we're talking with people and through like bigger pockets, people contact us and they're like moving into the market, or they're like, Tampa's coming up as like one of the best places to be, or, over the next couple of years, the anticipation and growth. And they ask us, what's our opinion on it, and, maybe on the market and where it's going. And I, of course we don't have a crystal ball, but I just say, look, this is all the development that's happening. We have the whole Ybor channel side downtown, like downtown St. Pete. There's like so many things just in the Tampa Bay area that's going on that, even if we have a pullback, I think we just have the demand. We have the employers coming in. Hillsborough Economic Development, I think it's committee or corporation, Hillsborough EDC, that on Instagram or Facebook and stuff, they're always putting out updates of, hey, we just attracted this massive employer that's bringing X amount of jobs and this amount of money, and they're investing this. And so I think that's really exciting to see. And I think that's going to insulate us a little bit, from stuff that might be impacting other areas a little bit more.
I have to agree with that too. I mean, all the different Forbes articles and Realtor.com articles that have been talking about Tampa for the last 2 years, it's all starting to come to fruition quite a bit. I don't know if I'll put his name out there, but when I had a conversation with one of the biggest investors in town, he pretty much told me that he feels like Tampa is somewhat recession proof because, like you said, we have these pockets of areas, Water Street, Channel Side, all these different areas that are just booming with development. And, it just kind of seems like it's one of those things that even if we do take that little bit of a correction that we're probably going to have in the next 6 months to a couple of years, whatever, that, again, no crystal ball, you can play it safe in those areas. But again, there are certain pockets that you got to be really careful of, and that's why it's really important to work with real estate agents that understand investment side of the business to understand what is a good investment long term, not just for the shiny object syndrome of what's going on right this second. So I want to talk to you guys, or talk to you, Rob, a little bit about what are some of the things that if you're looking to buy your first home that you need to start preparing for.
Yeah. So first off, a couple things credit-wise, right? So have an idea of what your credit score is.
Don't go to Credit Karma, right?
No, because
I know. I knew I'd get that exact response out of him.
That's like the Zestimate for.
Yeah, exactly.
I've seen with that it's 30 points to 40 points higher, maybe even sometimes more.
I've seen it as 100 points.
Right. Than crazy. What an actual FICO score is when I pull it, with the tri-merge credit bureau score. So don't put too much weight in that, but it's still a little bit informative,
Sure.
Just knowing, your liabilities, if you have any collections out there, definitely pay things on time. So that's 30% of your total credit score is payment history.
Okay.
The other 30% is utilization. So as you're looking at your credit cards or any revolving debt where there's a limit to a balance, make sure that that's about 30% of the limit on your card.
Okay.
So start to do that about 12 months before. Get those balances down. If you can negotiate or settle out any collections in the past, that's not a bad thing to do either.
Okay.
Now, I did say pay down credit cards to a certain point, but don't think you have to spend all of your money to pay off your cards. Okay, because when I do my analysis for the debt to income ratio when qualifying a home buyer, credit cards, we only have to take the minimum payment on the card. It's not the payment you make every month. Sometimes it's only $25. So
right.
I'd rather have you save that cash in your savings account to have available for a down payment, or to get you from a 3% down payment program to a 5% down payment program, because the rate's better, the PMI's lower, and that's a better use of your money, in my opinion. So what else as a first-time buyer? Another pet peeve, or just something that creates a lot more documentation, is large deposits. So that is when we look at 2 months of your past bank statements. Are we going to see any unsourced cash deposits in there, or checks that just say check deposit? If an underwriter sees that, they need to know where that money came from.
Okay.
Okay, so
people still have cash?
Dude,
you
so I
would be so surprised.
I had properties for sale, and the other agent ended up showing it, and then after, she was kind of talking with them, and yeah, I think they had the 120 grand or whatever was in cash, and they just were like, oh, we were going to pay cash, but it wasn't in the bank account yet.
You would be
That doesn't work.
I worked at a bank.
Oh my God.
And you would be shocked at the amount of people that have literally little cash in a safe deposit box.
Wow.
They say you're definitely not supposed to do that, because it could
Reminds
get
me
damaged.
of reminds me of Breaking Bad.
So yeah, that's actually come up in few buyer
Interesting.
conversations within the last 12 months.
Yeah.
So you have to, that money has to be seasoned in your accounts for at least 2 months, maybe
Okay.
3.
Okay.
Okay. If anyone is crazy enough to have cash.
Is that the
like
same thing with like gifting? Because I know like parents can gift money. Is that you just have to
can.
trace it, right? Essentially.
Yeah. Now that's important because there's rules that it has to be a family member for most cases.
Right.
So you can't just have a friend give you cash. So if we see that check deposit and they find out it's just from a friend, we're going to have to subtract those
Okay.
funds from your available assets. So that's why it's important to maybe wait on making that transfer until you talk to myself, and I can educate you on the best way to do that.
Okay.
So season your money, get that money aside in the account, or be ready to have that gift donor move that money
Okay.
when it's the right time.
So we had talked this morning about someone that's going to be an agent with us in the next couple of weeks, and she wants to buy her first rental property, so she's looking at like a duplex or quad. Can you talk about how you guys can utilize the rent income, and is it rent income that's already there, or can you use a pro forma, or like how does that work with maybe helping them?
Yeah.
I guess they can't maybe use that income to qualify for the loan, or how do you guys look at that?
You actually can, and not many people know that. So when you're looking at a residential mortgage, it has to be 4 units or less. It can't
Right.
be above 5. So there are some heavier down payment requirements if it goes like if you have 2 units or 3 units or 4 units. But the beauty of any investment property purchase is that you can utilize the future rental income to offset the new mortgage payment. So it's only about 75%, or I'm sorry. So we take a vacancy factor of 25% off the future rent income. So that number offsets the new mortgage payment. So it's a very low hit to your debt to income.
Okay.
Okay. So that helps. People don't realize it's pretty easy to qualify for that investment property because
Okay.
you can use that future rental income. It's just the down payment is what people have a hard time having.
Okay.
Okay.
So
That's really the biggest hurdle, is that down payment.
What if so say we do a lot of joint ventures at Outfast. So if you had someone that had that down payment but you were going to be on title, does that make a difference, or how does that work, or does that just have to be like a partnership type LLC, or do you guys even do LLCs?
So yeah, that's another thing. For the conventional loans, you cannot close in an LLC.
Okay.
You have to close in your personal name. then after that, I've educated my buyers where the title company can quick deed it right to the LLC at closing or shortly thereafter.
Okay.
So that would be the way to get around that.
Okay.
So if someone wanted to, their debt to income works and they bring in a private investor to fund the 20 or 30% down that they may need, is that a possibility? Or
it doesn't happen
they can show
much.
where the money is coming from, they can have it notarized or
I'd have to find out more detail on that. But if I were just to go off the top of my head, I would think that private investor, or they'd have to be a borrower on the loan to gift that cash.
Okay.
Because again, a lot of the guidelines say it has to be a relative, family member who gives you that money.
Yeah, I read that on Bigger Pockets actually a while back that with trying to do the Burr method, it has to be your cash for that down payment. And so I was wondering if there's one kind of workaround because the LLC you could obviously
if
have
you
joint
get the
venture in
money
that.
3 or 4 months before you buy the house, we just need 2 months of bank statements.
Okay.
Yeah.
Makes sense. Okay. So is that property you bought back in right before the crash, is that your one rental property or do you have multiple?
So I have multiple.
Okay.
But that was the first one I lived in. I lived in it for 7 years.
Okay.
Okay. And then, I found a wife, we got married and we moved out and that became
Found
a
a
rental.
wife.
So yeah. So that became a rental, but that's a great way to start building assets is just buy it as a primary because you get much better lending terms, just smaller down payments, better rates, better, PMI factors. And then after 12 months, you're allowed to move out and make that a rental. So yeah, that property, it was a 2-unit property.
Oh, sweet.
We lived in the bottom and our renters lived up top. It was friends of mine, but it's been great.
That's cool.
Yeah.
So how did you go about going after getting more rental properties then?
It's just saving up, working hard to have enough in savings for that down payment. And then, once I had that, just kind of keeping my eye out there for those pockets of areas in Tampa where I in my mind, thought there would be a lot of rental demand. So my other property is very close to the base and Bayshore. And I liked the size of it for the price. It was a 3-bedroom, 2.5 bath townhome.
Okay.
And for like $200,000, it was great square footage, so like 1,500 plus. Just great characteristics of a house where a family could rent. So yeah, so I jumped on that.
Your HOA didn't kill you on the fees?
It was only like 3 something. It's a
year?
smaller community. Yeah.
Oh, that's sweet.
Yeah.
Okay.
And
that's
it's
great.
sort of gated. You could walk to Bayshore. So I loved all those factors. The walk to Bayshore. I loved that it's close to the base. I loved that it was sort of in South Tampa. You know, right
What do
on
you
Gandy.
have it rented for at the moment?
$1,675.
Okay.
Yeah. So I'm not cash flowing too much. It's basically covering and maybe making me $50 to $100 a month. But I love the fact that it's paying down the mortgage and
So your equity is building every day.
Yeah.
Right.
And you have a longer term vision, and you have, as with something like that too, you're going to have a much better appreciation, likely appreciation play over time, as opposed to someone that buys maybe in a lower end area where their return's a lot better, but it doesn't really,
Yeah, because
values don't increase too much.
I work a
usually
ton.
crash.
Well, and I work a ton, and I know there's property managers that could help with that, and you guys do a great job, your company. But I self-manage, and I can't have those calls all the time, for fixing this, fixing that. So that's why I like, maybe a little bit more expensive of a neighborhood, but I feel like the quality might be a little bit better.
You get better
with the
tenants,
renters.
obviously, too, usually.
Sure. Yeah. No doubt.
So when you were looking to buy your rental properties, were you working with a specific agent or agency, or how did you do that? Like, how did you have your your fingers out in the marketplace looking for deals for you? Was it just you?
You'll probably. I was on Zillow.
He was on Zillow. Golly.
So bad. But it was just all kind of came to fruition. Like, I saw this townhome and I knew the agent that listed it because I talk with a lot of agents in the market and knew them, just called them up and kind of went from there. I don't know. I didn't have like a.
You didn't have a plan in place.
I did not have a plan, and that's how a lot of it happens when you're buying a house. People come to me to get a pre-qualification, and they're like, maybe in a month or two we're gonna find something. And
6 months later.
The next weekend they're like,
really?
Oh, we fell in love with this house.
Oh, jeez.
We went to this open house and we're ready to move forward.
That's how it happened with us. Like, we were in a lease until I think November, and it was we bought in May, And I just always had this searches set up on the MLS, and we saw something pop up, and we looked at that, and then I kind of expanded the search and saw something else. And yeah, like luckily I had all my documents and stuff on my computer already, and I sent it to the loan guy. I think I had the pre-approval the next day, and we made an offer that weekend. And then I'm like calling the landlord, like, hey, you know, these are pretty good tenants. We need to break this lease. And she was like mad cool. She didn't even charge us to break it or anything.
That's sweet.
But we did a good amount of work, the rental, when we moved in. We repainted, like, new ceiling fans. So we did update the unit for her. And so obviously she kept all that. But yeah, it just kind of happened spur of the moment.
It can happen quick. Yeah.
So let's jump into some of the pitfalls that you see some of your buyers and clients do. That's a deal breaker. So, you know, there's obviously lots of things that can happen when you're under contract on a property. So let's talk about some of the pitfalls that they need to avoid.
Off the top of my head, I would say don't quit your job.
But it can be a lateral move, right, though? If you, like, transfer from, like, one position at one company to another, it's not too big of a deal.
That's correct.
But
if you have a job already lined up, offer letter signed.
Talk to your lender first.
Yes.
Yeah, please. But yeah, that's one. While you're in process, don't take out any new credit, okay? Because sometimes we do the analysis, and maybe someone's super tight on debt to income.
Yep.
If you go out and finance that furniture and get a credit card, right before closing, every lender checks not a full credit pull, but just if any new accounts have been opened. And then we'll have to get what that new payment is on that credit account, and it could impact the ratios. So, and also it's like a couple days before closing, so it just creates a lot of extra work.
Just wait 5 more days to go to Ashley Furniture and get your credit line pulled.
You got it.
No new cars?
No, I mean, yeah, if you're thinking about buying a house in the next year or two, please don't get an $800 car payment you know, I mean, that's going to really impact your ability to purchase a home in the price range you want. I mean, it's so important to keep that stuff kind of low if you know you're going to be buying. After you buy, go ahead and get that car. But
how do you guys approach the student loan debt? Like, how is that calculated? Obviously, that's for a lot of people, you know, those are pretty high bills. How does that factor into when they're looking to buy?
The guidelines literally change like every month. So
really?
It's different for every loan product. FHA has a different way to calculate it. VA has a different way to calculate it. Conventional has a different way to calculate it. Even between Fannie and Freddie Mac, they have a different way. So that's why it's important to talk to your loan professional. Talk to me. I can let you know how it's calculated. But for conventional, they've recently kind of matched each other, and you can basically use the income-based repayment payment. So I found that's been a nice low payment for people, and I can use that in the qualification. So if you're out of school and you start your job with the student loan companies, you can ask that you go on an income-based repayment plan. That keeps the payments nice and low for your qualifications.
Sweet.
But if they're deferred, if they're sitting there deferred where there's no payments, because you're allowed to do that, that kind of hurts you, because then I have to take 1% of the outstanding balances sometimes as your monthly payment. So it's almost better to go into that repayment and do the income based, in my opinion.
Good to know. Anything else they should avoid, you know, while they're under contract, besides the new line of credit?
Just the movement of large amounts of money.
Okay,
because that creates a lot more paperwork. I can't even think of any off the top of my head.
I have one question for you. How important is it to make sure you have an agent that understands the process?
Oh, yeah. Very important.
Because the communication, I feel like some of our agents that have had problems with other agents is the communication of the buyer and the buyer's lender, and the sellers are kind of left in the lurch. So talk a little bit about that. If
like
you could.
the lenders like go dark, and it's like, what's going on here?
Yeah.
Well, I don't even feel it's like the lenders usually. I have a feeling it's usually the agent that just is a part-timer that literally doesn't know anything. But that's just my best
In my
guess.
opinion, it's a combination of the two, because it could be the lender not updating that agent, so they don't know what's going on. So in my business, that's something that I pride myself in, is great follow-up, great communication. That's so important to the whole transaction for the seller, the listing agent, the buyer's agent, the buyer, and the title company. So there's like literally 6 people that need to know what's going on. And it all revolves around us, the lender. So I know Jeremy and his retail team of realtors do a great job. They kind of set the expectations for the client up front, and that's super important. That, especially with the first time buyer, they've never done this before.
Right.
So the agent and the lender need to be really mindful of setting the expectations of what the next steps are, what's to come, maybe what could be the potential outcomes if this happens. So I would say that's important, to make sure you work with an agent that, like you said, is full-time, that has done transactions before. Work with a lender that's been in business for 5, plus 10 years, that has great reviews online. Mm-hmm. So that's something the buyers should be checking too. Yep. Is how's their online profile? Do they have past clients that rave about them? Mm-hmm. Even when we buy stuff on Amazon, we're checking out the reviews. So why not do that for your agent or your lender? Yeah,
I agree. So one of the things that we've been working really hard on the last year is building a really big social presence, because that's where everybody's at. So if you're looking to work with someone like yourself or an agent, make sure that their brokerage and their team or themselves are active on social media, have the reviews that you were talking about, have likes and comments on their stuff to show that they actually know what they're doing. So. Rob, how do people get in touch with you? They're looking to buy their first home.
So
obviously, contact Outfast first, and we'll put you in touch with them.
Fast,
but
that's right.
What's your contact information?
My Instagram name's @mortgage_Rob. Okay. That's a good way. Or Facebook, Rob DiGiore, DIGIORE. Or my cell phone, 813. Do we want to give phones out?
You can give your cell phone. You are a brave man.
Yeah, okay.
I'll
do it. I'm ready for it. Bring on the calls. 813-336-5155.
Boom. Awesome. Rob, thank you very much for coming in,
You're welcome.
educating us and our followers. So again, if you haven't liked us, subscribed, do it right now, and we'll see you guys on the next one. Thanks.